Now, if you're an investor like myself that has been buying into ULTY, the Yield Max Ultra Option Income Strategy ETF for that juicy weekly income like we've seen over the past several weeks. But maybe you're not necessarily super thrilled with the performance as far as price return goes for this ETF, and you're concerned about some NAV decay long term. Well, this video is going to be perfect for you because I just recently came across something that might interest you guys if you are seeking ultra high yield, but also hate NAV decay, NAV erosion like myself. All to say that if this is you, definitely stick around, drop a like down below, and let's get right into it. My A to Z dividend investing ebook has already helped countless dividend investors get started with their journey. And my custom dividend tracker, the one I use all the time on my videos, has also helped so many investors stay organized and has actually helped them see their dividend income grow. Well, today I have something even better for you guys. When you click the first link down below in my description and you grab my A to Z dividend investing ebook, today you're not only going to get the ebook, but you're also going to be getting the custom dividend tracker, which you can use to track your own dividend income ongoingly. Get direct access to my personal email where you guys can email me any questions regarding dividend investing. You're also going to receive a link to view all of my holdings inside my 7-figure dividend portfolio and see all the positions I add and take away ongoingly. And you're going to get for absolutely free my brand new high yield dividend investing ebook where I show you the power of maximizing some of these high yielding ETFs and teach you everything there is to know about that also. This is going to be your one shot to grab everything inside of one single bundle, but you got to move quick because I'm not going to offer this for long. Now with all that, let's get back into the video. Now I came across this article on seekingalpha.com from the Dividend Collector. It says Rex Nvidia Growth and Income ETF, forget ULTY and buy this new ETF instead. It's a very good breakdown. I started reading it and I wanted to share with you guys. It says summary covered call ETFs are gaining popularity among income investors, especially amid persistent inflation and rising demand for derivative income strategies. YieldMax's Ultra Option Income Strategy ETF has suffered significant NAV decline since inception, despite high distributions, making it less than attractive for long-term investors. Now, the Rex Nvidia Growth and Income ETF offers a lower expense ratio, weekly payouts, and a hybrid strategy that allows for both income and capital appreciation, which is definitely something a lot of investors are seeking because NAV erosion, NAV decay is the worst enemy when it comes to ultra high yield. NVI's recent strong performance and partial uncapped upside make it a compelling alternative to ULTY, particularly if tech sector momentum continues. Point, I really haven't dug super deep into this new Rex Nvidia Growth and Income ETF. I've heard some things about it, pretty much all good things so far, but let's read on. It says buy Rex Nvidia Growth and Income ETF, ticker symbol NVII. It says NVII is a new derivative income ETF with an inception date of May 28th of this year. So the fund has a very short track record of less than 3 months. As a result, this could make them a high-risk investment as they have no track record or historical data to go on, generally speaking. But over the past 3 months, this ETF has performed well due to the market continuing to make new highs. NVII holds treasuries along with selling call and put options on Nvidia Corporation. They then said, but here's why I think investors should consider them instead of ULTY. Since June, NVII has significantly outperformed ULTY and the S&P 500, while ULTY's price has continued to decline. NVII's price has continued to climb, up an impressive 27.2% in 2 months. But throw in distributions and ULTY's numbers look much better, beating the index in total returns. Even then, they still trail behind the new NVII significantly. Again, past performance is no indication in future performance, which is always true, and this is only over a 2-month period, so take it with a grain of salt. But NVII is also more attractive when looking at their other metric. Both funds pay on a weekly basis, but NVII's 0.99% expense ratio was much lower than ULTY's 1.4%. So while investors are paying about $132 per year, for every $10,000 invested, you'd only be paying around $99 with this ETF. Additionally, Rex Nvidia Growth and Income ETF seeks to provide both income and allow capital appreciation by having half their portfolio uncovered. ULTY, on the other hand, is more geared towards investors looking for income now. Now, this is something that I've talked about for a long time now. Even in my long-term portfolio, a lot of you guys know that I like to sort of follow a hybrid investing approach, buying into some names that offer much more growth potential, much more high income potential, and then some names that offer some things like dividend growth, sort of having a little bit of everything covered. Now, especially as some of these ultra yielders have been decaying like crazy over time, I think more investors are waking up to the fact that maybe you'd be willing to forego some ultra high income generation if it meant that your underlying has less of a chance to decay. They then said, and this is why their share price has been on a steep decline since its inception of February 28th. Over the past year and a half, ULTY is down over 69%. While they have awarded investors with distributions, further share price erosion is something to be aware of moving forward. And this is because before, the covered call fund only sold call options which cap their upside and expose them to downside risks. However, in recent months, management has made changes, now selling put options to limit downside and stabilize NAV growth. But the question is it too late? Will their share price ever recover to $5.90? Since inception, as previously mentioned, NVI has continued to see their share price steadily climb, up nearly 31%, and because they only sell options on half their holdings, this will allow for more upside if the market continues higher. On the other hand, YieldMax ULTY has experienced NAV decay since inception, but their recent collar option strategy is expected to stabilize NAV going forward. At the beginning of their fiscal year in February of 2024, NAV was $20 per share. At the end of the year, NAV was $9.89 per share. Now lastly, talking about taxes and of course risks. In conclusion, taxes, both funds pay return of capital, which I personally am seeking, meaning taxes are deferred until you sell. Moreover, this makes them better to hold inside of a taxable account. So both ETFs are ideal for younger investors who have yet to reach the age of 59 and a half to withdraw from a Roth IRA. Risk in conclusion, the obvious risk with NVIs is they could suffer the same fate as ULTY and see NAV erosion over time. If so, this could lead to significant losses in capital and lower distributions in the long term. These are the two main things that you should worry about with any ultra high yield ETF. In general, the fact that they can decay in price and really struggle to regain that ground that they lost, and of course the other fact that they can lower their distribution rates moving forward. Those are the two main things you should be aware of. Moreover, covered call ETFs could be considered unattractive for retirees as their variable distributions can make it harder to plan for retirement expenses. But NVIs remains attractive due to their strategy to seek both income and growth due to their one-half capped upside potential. Furthermore, if the technology sector, XLK, continues to drive the market performance, NVI could continue to see the price appreciation as a result. Now, even though there are some investors out there that are seeking a lot more income generation and or a lot more growth, I do think that over time there's going to be more and more investors that sort of follow more of the hybrid approach like I'm doing and want to seek some income generation, some high income at that, but also don't want to be in a position to where the underlying is going to decay over time and then have a lot of struggles to move back up in price. Because you see with NVI, the one-half uncapped upside potential means that even if the underlying drops in price, let's say quite sharply, it can also potentially rebound a lot faster because the entire portfolio isn't hedged. So now that we talked about how the Rex Nvidia Growth and Income ETF could be a potential sub out for ULTY, I lastly want to hear from you guys down below. Is NVII or any of these new growth and income ETFs that have been coming out as of recently inside of your portfolio as of yet? And if so, let me know which ones and which names I should look into next. Let us know in the comments down below. If you enjoyed this video, make sure to please drop a like in it, subscribe, and I'll see you in the next one. Thanks as always for stopping by, and if you are interested in investing, make sure to check out these recent videos I posted right here.